Hey, welcome back to YT Finance, and today we are talking about NEO stock price targets and NEO stock price predictions, along with the latest news update for this company, as well as we'll perform some stock analysis. Today we're going to talk about NEO's recent releases of their December delivery figures. Then we're going to see what the Motley Fool says about NEO, whether they think it's a buy, sell, or hold for 2022, and then we're going to move on to talk about the three important takeaways from NEO's most recent event, which was NEO Day in December. Then we're going to talk about how I think NEO is undervalued by around 55%, and that's going to come from Forbes. And then lastly, we're going to go over some momentum indicators that signal us, especially if you're a trader, that NEO could be a clear buying opportunity right now. So remember to like this video right now for more NEO videos like this one. Comment down below your thoughts on NEO stock. Subscribe if you are new, and now let's get right into today's stories. So NEO is a Chinese premium electric vehicle maker, and it has recently released its full-year delivery figures. So in December, NEO delivered around 10,489 automobiles that are completely electric. So this is a premium electric EV play. This would include around 2,782 NEO ES8s, which is an electric SUV, 4,939 NEO ES6s, which is a high-performance electric SUV, and 2,768 NEO EC6s, which is a 5-seater premium smart electric coupe SUV, and coupe just means that it has 2 doors. The 3 months ending for December 31st of 2021, which ends their fourth quarter, NEO delivered around 25,034 vehicles, which represents a growth of 44.3%, which is absolutely amazing, and investors should get really excited about this. For the entire year, NEO delivered a record high of 91,429 vehicles, which is more than double what it delivered the year prior. NEO also has delivered around 167,000 vehicles in total from the start of when they started to deliver these vehicles. From analysts, they think that NEO is a strong buy right now, and I tend to agree with them. According to this article, 7 analysts say that the stock is a buy, and 1 says to hold, with the average stock price target, which would be around $61.86, which implies around a 95% upside from where the stock trades at currently, because the share price has fallen around 37%. The current stock price of NEO, which is ticker symbol NIO, is about $32 right now. The low end price target, if I can change colors to red, is around $20. And then the high end price prediction, which I'm very bullish on the stock, so this is what I think the stock is going to be worth in the next year or two, and that is $87 per share. And we're going to talk more about these price targets as we move on through these articles. In the next article, we can see that China has had a lot of problems. There's been a lot of key developments in China, and we're going to discuss that because NEO is a Chinese electric vehicle company, so if you don't want to buy any foreign stocks, then NEO may not be for you. However, it has provided me with astounding returns along with BYD and Tesla, which are some of NEO's established competitors, along with some other EV startups such as Li Auto and XPeng. We should also include other legacy automakers such as Volkswagen and General Motors, and we could probably even throw Ford in there. In November alone, BYD, which is a giant company, sold 90,000 or over 90,000 electric vehicles in China, while NEO just in November sold around 10,000, almost 11,000 vehicles. This also doesn't compare to Tesla, who sold around 52,000 or over 52,000 electric vehicles in China in just a single month. So NEO does have a lot of scaling to do compared to these giants over here, but I believe that NEO is a fantastic investment right now, especially if we can get this company while it's starting up. What I do like about NEO, though, is that its revenues still compete with their competitors very accurately as well. So NEO is in purple here, and it is outpacing other startups like XPeng and Li Auto, which is always good to see. Now, I own all of these companies, so it doesn't really matter to me. I just want to take up a market share for the EV space in China and around the world, and I think that these companies are a fantastic way to do that. However, there is a lot of risk here because they are foreign stocks. However, NIO is a pure EV play, unlike BYD, because BYD gets some of their revenues from other sources, and only half of its revenue, or around half of its revenue, comes from vehicle sales. So if you want a pure EV play, NIO would be where you would want to invest some money if you would want to. Now, none of these are recommendations. Again, this is just what I'm doing and what the Motley Fool is saying, and even when we go over to Forbes, that's just what they're saying. None of this is financial advice. This is just informational for entertainment and educational purposes only. Now, what I am excited about is that NIO has a battery as a service swap model, and I think this is great. Tesla wanted to try this in the United States, and they ended up scrapping the entire project because EV charging stations were more successful. And right now, NIO has around 700 of those swapping stations, and NIO has conducted around 5.3 million battery swaps, which is a huge number. On top of that, NIO is also launching 2 new models of cars, which is the ET7, which is a luxury sedan, and the ET5, which is a mid-size sedan. And these models will launch in 2022. However, a third one has not been unveiled yet. So there is another model, but they're keeping it as a secret for now. And I think this is going to be a great catalyst in 2022 when this is revealed. Both the ET5 and the ET7 have a $106 monthly subscription for their autonomous driving updates. So these vehicles come with autonomous driving. However, other sources say this is around $107 a month. To add on to that, NIO offers different battery options, such as their 75 kilowatt hour battery and their 150 kilowatt hour battery, which can reach up to 620 miles on a single charge, which is absolutely astounding. The ET5 model costs roughly around $51,000, and the ET7, that starts at around $70,300, because again, these are premium electric vehicles. Now, these vehicles are going to be a great selling point because they're going to have NIO increase their revenues as well as their sales numbers for 2022. So that is something to look forward to. The ET7 is set to start their deliveries at the end of March, and the ET5s are expected to start being delivered in September of 2022. NIO has already started their deliveries of the ES8 in Norway, which is going to be in December, and in 2022 the company plans to enter 5 more countries in Europe, and we're going to talk about what those 5 countries are in another article. The ET5 also includes a digital cockpit of augmented reality and virtual reality technology. So technically, in some regards, NIO could be looked at as a metaverse play in a sense because it's going to benefit from the metaverse. However, it's not directly involved in building the metaverse itself. It's just that it's going to be equipped with AR and VR technologies. More than 3,000 fast chargers and 3,319 destination chargers across China have already been implemented, which is amazing news. And NIO is also connected with around 430,000 third-party charging stations. By the end of 2022, NIO also wants to have over 1,300 battery swap stations installed, which is almost 2 times the amount that they have now. And they also want to implement 6,000 fast charging stations on top of another 10,000 destination chargers in total, which is going to be really fantastic, and this should again excite investors a lot. NIO also anticipates to extending its production capacity because they are opening up a second manufacturing facility in NIO Park, and this is going to become operational in the 3rd quarter of 2022. So this is not only going to increase their delivery numbers because they have more vehicles to offer, they are doing this just to keep up with the demand. Currently, NIO has a price to sales ratio of 9, which isn't cheap. Right now, NIO is a better buy in terms of value compared to Lucid and Rivian, just because Lucid and Rivian, their market capitalizations and valuations are so high compared to NIO, which is really good because NIO has recently pulled back, which is why I also think that it's undervalued a lot, but we're going to get into that in a moment. I want to go back to this article right now, and I'm going to talk about their forecasted or forward price to sales ratio. So right now it's about a 9, but their forward price to sales ratio is much better at around 4.6, and this puts them all in competition with one another, which is a good sign when competition is all trailing each other, because that means all of these are pretty good. We would just have to look at the revenues, fundamentals, and various financials on their balance sheet. XPeng has a 6.6, NIO has a 4.6, or maybe a 4.5. If we round up, it's a 4.6, and Li Auto has also a 4.5. If we scroll down here, BYD is trading at a sales price to sales ratio of around 3, which is very good, and that means that this is very fairly valued right now. However, like I said earlier, if we compare the forward price to sales ratio or even the market caps compared to Rivian and Lucid, NIO is just an all-over better buy. Now, again, I do have videos on these companies, and I do like and own these companies. Actually, except Rivian, I don't own Rivian. I do own Lucid, though, and I've been trading it very successfully. But I'm waiting for Rivian to pull back because right now the market cap is just too high for me to get in on it right now. Now, I want to go over 3 important takeaways from NIO's most recent NIO Day event, which was in December, and they showcased one new electric vehicle, which is going to give Tesla, in my opinion, great competition. And as we talked about, it's their ET5 sedan. And the reason why this is going to give Tesla some competition is because of its range. As we said earlier, it has a range, the ET5 has a range of 620 miles, while Tesla's Model S sedan, specifically their Plaid variation, only has a range of around 520 miles. Now, there is a caveat here that not many people know about, is that this number, the 620 number, comes from a Chinese TSLA testing protocol and not the EPA protocol, which is much stricter, and that's what Tesla used. Now, this TSLA testing protocol is similar to the European Driving Cycle or the New European Driving Cycle NEDC testing, and it's not as accurate as the EPA. I would say the EPA is much more accurate overall, and the TSLA testing protocol for how long a battery can last or how far a vehicle can drive, and the NEDC testing protocol, or testing cycle I should say, are not as good or as accurate as the EPA, which is what Tesla did. So naturally, this is going to inflate and produce a 30% higher range for the EVs that are tested using the NEDC testing cycle or the TSLA testing protocol. So the range gap between the ET5 and the Model S Plaid is probably more narrow than we think it is. Although they have similar ranges, the ET5 is substantially cheaper than the Model S Plaid variation for Tesla, because the ET5 costs around $51,000 and the Plaid is around $134,000. So there is a huge price difference. Something more comparable to NIO's ET5 would be Tesla's Model 3 that costs give or take around $51,000 as well, but the range is substantially lower at only 334 miles. We also know that the ET5 has autonomous driving, or NIO's autonomous driving, also known as NAD, and like we said earlier, this costs around $106 to $107, while compared to Tesla, to get the autonomous or self-driving option, you're going to have to pay around $10,000 extra on top of the sticker price. But their 2025 plan is to infiltrate and expand into 25 countries in total, one of them hopefully being the United States, because there is talks about that. NIO also surveyed Norwegian customers for their battery as a service model, and 92% of them absolutely love it. Now, I don't know how that's going to go over in the States, because like I said earlier, Tesla scrapped that model, and I'm curious to see how NIO is going to adapt in the United States, because we have great companies such as Lucid and Tesla along with other companies. So we're going to see how the competition for them heats up. But in my opinion, competition is always very good because it allows companies to innovate and give cheaper prices to the customers. There is a lot of risk investing into a Chinese company, and I don't want you to be blindsided by this risk, because I think NIO is a great company. However, there is substantial risk just because it is a foreign stock. For instance, I had money in DD Global, and they are now moving from the New York Stock Exchange over to a Hong Kong listing, and this is not good. So naturally, I have sold my DD Global, ticker symbol DIDI stock, and I had somewhat of a loss in that because it's been crashing due to this news. We also know about China's real estate titan Evergrande, and that was not a good story either, because they are defaulting and having to sell a lot of their properties just to stay above water. So again, that is absolutely terrible, and this is the risk that we run by investing into other companies. Now for the Forbes article, I want to scroll down and I want to talk about NIO's forecasts. So, NIO forecasts somewhat slower revenue growth for their fourth quarter, but they still anticipate that the revenue will increase by around 40 to 52% increase, which will give us anywhere from around $1.45 billion to $1.56 billion, which is to me still great growth numbers, even if it's technically slower than some other quarters that we've seen. However, if we look over to their 2022 analyst forecasts and projections, NIO's revenues are anticipated to grow over the entire year by around 74%, and this comes from data from Seeking Alpha, which says that their 2022 revenue will grow to around $9.83 billion, which is absolutely amazing news, and I am very excited for it. Now, the Chinese EV market is also rapidly growing because they're kind of the EV capital of the entire world, and in 2019 it was worth around $98 billion, and it has a CAGR, or a compounding annual growth rate, of 31%, and that's going to last all the way until 2026. So electric vehicles and charging station plays, I think, are going to be fantastic plays to get into and stocks to buy, whether you're going to long-term hold them or even if you want to trade them. Analysts also love NIO overall, as we talked about in the beginning of the video, that many analysts absolutely just love NIO, giving it very good price predictions in my personal opinion, and according to JD Power, NIO also ranks as one of the highest EV makers just for luxury, quality, and being a premium brand, so this is always fantastic news to see as well. Now, we don't want NIO to get delisted just like DD Global, which I alluded to earlier. That would be catastrophic for the stock, and the reason why certain Chinese companies are delisting and moving to other exchanges, such as a Hong Kong listing or the Hong Kong exchange, is the Chinese government and regulators are really pushing some companies into corners, especially if they have a lot of data. Also, tensions have been rising between the West and the East, specifically in the US and China, so China wants to be more independent, kind of gravitating away from the United States. So if NIO ever decided to delist and list on other exchanges, or simply just decided to delist from the New York Stock Exchange, that could be catastrophic for some investors. Now I want to talk about, from a trading standpoint, we want to use our indicators to see if NIO is a buying opportunity right now. So I always like to use, among other indicators, the Relative Strength Index, which is the RSI, and it's a very popular indicator that gives us and measures the momentum of a company. For instance, if the RSI is above 70, this means that the stock has been overbought, which means that the price is very high right now, and we should not buy into the stock if we are following the RSI. However, on the flip side, if the index tells us that it's below 30, so the RSI is 30 or below, this is an oversold condition, which I believe NIO is trading at right now, and this means it's a good time to buy according to this indicator. If we have followed the indicator in the past, we can see that it's been very accurate. So the RSI was over 70 when it peaked over here on January 11th, 2021. If we sold right there, we could have saved ourselves a huge dip. The RSI then dropped below 30 right here on March 8th, and we get to see some volatility and consolidating, and then we would get another buy with the RSI dropping below, and that would be on May 13th. And then we would get a nice run up right here before we would sell again, because the RSI again was above 70. And then right now we just hold it plainly. It's consolidating, no buying or selling. But fast forward to right now, from December 20th onwards, we see that NIO stock is trading below the RSI of 30, which means that if we are following the RSI indicator, we can see that this is a good buy rating, and according to the historical data, we can see that NIO will either consolidate for a couple months, and then it should surge. But that is all I have for today. I hope you liked this NIO stock analysis video with price targets and price predictions from analysts. If you did, or you like the format of these new videos that I'm making, don't forget to like this video right now, comment your thoughts down below, subscribe if you are new,